And Dennis, when we are talking about, I believe our caller brought up that perhaps in April we are expecting another round of quantitative easing. How much more money can we print, Dennis? How much more money can people still keep going on, with this easing, before a hard landing happens?
So maybe today I will just do the reverse. Instead of me trying to tell you the conclusion, I will share some information with listeners, and I will leave the listeners to form their own conclusion. So, okay, U.S. debt limit, we know that last year it reached the debt limit of 14.3 trillion in July, and that created a lot of anxiety. They have to raise the debt limit. They managed to raise it to about how much? $16.4 trillion. And so please take note of the date. July, U.S. total debt was 14.3 trillion. And good news is that in 6 months' time, U.S. has managed to chalk up another 1 trillion of debt. So currently the U.S. debt is at 15.294 trillion, close to 15.3 trillion. And the debt limit has been raised to 16.4 trillion. So my question to listeners is there a possibility that U.S. will reach its debt limit again sometime in year 2012? And if the last round, when they hit the debt limit, S&P downgraded it to AA+. If this round they hit the debt limit again, will S&P downgrade it again? And to what level? And last round, when the downgrading was done, there was not much harm done to the U.S. bond market. But this round, can we assume the same will happen, that nobody will sell off the U.S. government bonds?
This is MoneyWise on 938 Live, and we're joined this evening by best-selling author of What Your School Didn't Teach You About Money.
Not a dragon baby, is he?
No, I don't know. Dennis, are you a dragon baby?
No, but the dragon took my horns, that's why it can fly. I'm born in the year of the rooster.
Okay, took his wings.
Good thing we gave him some water.
Took his horns. All
Good
right.
thing we gave him some water, because he'd be breathing fire otherwise.
Indeed, he always does. We have Michael on the line, and Michael has a question for Dennis. Michael.
Yes.
Hey, good evening. Go ahead.
Yeah, I'd like to ask Dennis there. He just brought up an interesting point about the debt ceiling coming up again, and probably, I suppose, there will be a test again on this brinksmanship that happened the last time. I was wondering what Dennis' idea would be if this QE3 and comes along and all this European and Americans all kicking the can down the road. If really things really get bad and everything starts collapsing, as you said there, with the U.S. selling all the bonds and all that, whether many governments will get into trouble, and also whether our government should start taking alternative measures and protect the investments and things like our CPF.
Okay, Dennis.
I think there's very little anyone in the world can really do, because the problem is US dollar is the global reserve currency. So you look around the whole world, all the countries in the whole world, they have about 30% to 50% of their foreign reserves in US dollars, bonds, including Singapore. So there's really little you can do, because that's the power that US have. Because imagine someone owes you money, and the only way but he can't pay you, but he's your biggest customer. So what happened? You have to lend him more money so that he can then use the money you lend him to buy the goods from you. That's the situation between China and US. China has a total foreign reserve of 3 trillion. 1 trillion is in US dollars. US is its biggest customers, but US is not able to pay the debt, and the only way that China can continue to grow the economy is by continuing to sell to US. So China have to continue to buy US government bonds, lend more money to US so that US can buy goods from it. I know it doesn't make sense. All this kicking the can down the road, the problem is no road is endless. There will always be an end to the road, and they, even if they are successful in postponing the crisis from 2012 to 2013, do not be too happy, because a crisis that is postponed only gets worse. It doesn't get better. So because the root of the problem is Europe and US have been spending more than they earn for the last 20, 30 years, spending more than they earn. So we know that if an individual spend more than you earn, you end up in bankruptcy. The same will happen to countries, and there's no two way about it. So the only solution is for them to start cutting down their spending, start trying to at least do not increase the debt and start paying down. But when they do that, there will be a drastic recession for a few years. There will be drastic pain, and none of the politicians are willing to take the pain, because all the politicians say that please make sure that after I step down, then troubles begins. So the same goes for Obama. So Obama, I think now is trying to push Bernanke to go for QE3. And why is Bernanke not coming out QE3 now first? Because Bernanke knows that he has only one bullet left. They are going to hit the debt ceiling very soon. So he has only one last round of QE he can do. So imagine if you have a revolver with just one bullet left. You'll be very careful to use this last bullet. I think it will be short this year, but if they pull through 2012, I really don't know how to think about 2013.
Michael, does that answer your question?
Yeah, Dennis explained it very well. So what happens if America defaults? America, let's say, declares bankruptcy, and then China gets into bankruptcy too, because there was an article saying that China will be worse off and will be really the poorest country if, all this bankruptcy start arising. And I think Societe Generale already blame it. The U.S. is causing all the problems in Europe. So where are we going to end up in the end,
Who's going to be accountable? How much more can we, like we said, how much more quantitative easing can be done?
Maybe I share more information so that listeners can form their own conclusion. And Europe, some people say that the Europe debt crisis has more or less now quietened down. Things is start to turn rosy. How true is that? I just want to share with everybody. Europe has a total of 1.2 trillion euros debt to be refinanced in 2012, and out of this 1.2 trillion debt, Italy itself has a market share of about 400 billion. So Italy has to refinance 400 billion debt in 2012 alone. So the question is, at what interest rate? If the interest rate is above 6%, Italy will not be able to pay its debt. And when that happens, that means Italy will be the next to go down after Greece. And I'll leave for listeners to form their own conclusion.
What do you think we're in for in the long run?
There will definitely be the financial crisis. It will definitely be worse than the previous crisis.
You're still maintaining that the financial crisis is coming.
Yeah. No. I share with all this information. Maybe I share with you an additional piece of information. Japan debt level has gone up again. Now Japan debt to GDP is above 200%. It is now at 218%, and by next year will increase to 230%. And the cost of ensuring the default of Japanese debt has gone up. That means the price of credit default swap has gone up, and that is why recently Japan government said that we are going to increase GST, because they know that if they don't boost the government revenue, sooner or later people will have doubt about its ability to pay its debt. But Japan is in a very unique situation because it owes its debt to its own people. So when Japan goes down, Japan will go down itself. It's not going to
drag anyone else.
Yeah, because most of the bondholders are just Japanese themselves. But another thing is that the strengthening of the Japanese yen is now doing a major blow to the Japanese economy, because Japanese yen strengthened. So you can see that a lot of the Japanese exporters are reporting lower profits or even in losses. And who are benefiting? Actually, the US and the Germans. Last year, you can see US car maker like General Motors, the German car makers like Mercedes and BMW. They have been reporting record sales. Why? Because of the strengthening of the Japanese yen, and that's why your Toyota, your Nissan, your Honda, people would rather buy the rest. Yeah, so that's another thing, that the Japanese economy is likely to also hit a very bad patch, probably in recession this year and next year. What about China? China, now we are starting to see the property market starting to come down. How much impact would that be? I think it would not be inconceivable for China property market to fall by 50% in price, because in the last 5 years the price has gone up 200%. So imagine a property was 1 million 5 years ago, now is 3 million. So a drop by 50% means it dropped from 3 million to 1.5 million. It's still 50% higher. So, but if China property market drops by 50%, a lot of the SME in China will collapse. Why? Because in the last 2-3 years, a lot of the SME owners, they borrow money from a bank to speculate in the property market. So if the property market collapses, they will have no money to pay the banks. So a lot of the SME will collapse, and this will then trigger an increase in the unemployment rate in China. So even China is not looking good.
Well, we have someone on hold, and I hope you're still there. Caller, good evening. You have a question for Dennis? Yes.
Hello.
Yes. Hey, Victor, go ahead.
Hey, hi. I want to ask Dennis, what's the future of blue chip investments if a recession comes? Will it be affected, or how badly they'll be affected? Thank you.
If a stock market really falls, everything falls. Blue chip, red chip, potato chips. So really,
at least the potato chip you can be eaten.
Look at the last round. In 2007, DBS fell from $25 to below $7. So DBS, of course, is a blue chip, and Keppel Corp dropped from $15 to about $4-5. Of course, Keppel Corp is also a blue chip. So history tells you the answers.
On that note, thanks, Dennis. That was Dennis Ng. He's the author of What Your School Didn't Teach You About Money. You've been listening to MoneyWise on 938 Live. And, of course, in the following weeks, I'm going to ask Dennis to come in, and we'll take apart the property market and see what's in store property-wise for the year 2012 and beyond. Thanks for listening. I'm Keith D'Souza. We'll talk to you again next week.